Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about a stock that we're recently in on, and we actually just sold it this morning. We're going to be talking about our full approach, our full strategy behind why we entered, our thought process behind it. So I hope you guys will enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, check out our school. It's a swing trading masterclass. We have private live streams, quizzes, lectures, a group chat, everything you guys need to get started with swing trading. So check it out down below, guys. And the thing about it is, I don't believe in getting rich quick. I don't believe in alerts. I teach you how to trade. I teach you how to set up scanners so you can find opportunity. So guys, check it out down below, and you guys can use code LEARN because we all want to learn to trade. Code LEARN for 50% off. I'm only going to do that for one more spot, so check that out down below. And guys, let's jump into this. So to be completely upfront with you guys, I've been swing trading for over 6 years. So with that being said, I'm going to be talking about a strategy that I use. And the thing about trading and what I would recommend doing is if you're just starting out, if you're a beginner, take a step back and just watch. Take a step back, watch, start paper trading, start that process of learning rather than just funding an account and start trading as much as you can. No, take a step back, focus on paper trading, focus on learning, and then start small and work your way up. So let's talk about the stock here. So this is the broker we're using. This is Moomoo. Now Moomoo is awesome because it's a trading broker and it has really, really good tools. And I'll show you guys what I mean by this here in a second. So the thought process with this stock here is super, super simple. Is I find stock with some sort of upward trend that has sold off down to some level of support. So support could be a variety of things. It could be an indicator, it could be a moving average line, it could be a trend line, or just a certain price. So with this stock here, if we draw out a trend line, you guys will notice that we've seen great buying pressure several times on this line, right? Once, actually we could even extend it down a little bit more, right? So you guys can see it hits it, buying pressure, buying pressure, buying pressure, buying pressure, buying pressure. So now you look at it and you go, okay, well, if I want to buy this stock, I want to buy this thing as close as I can to this trend line. But you also want other supports in your favor. So one of the supports here that this stock had was this blue line. This blue line is what we call the 90-day moving average line. It acts as support. It acts as resistance. So you want to find a stock on an upward trend that is sold off down to a trend line, preferably on a moving average line as well. So now looking at it, you go, okay, you just buy on the trend line, right? Well, you also want to look at an indicator called the RSI. The RSI stands for the Relative Strength Index. In simple terms, it pretty much tracks momentum. So you're entering a position and it's not just going to continue to sell off. So looking back here, the last time I was trading for, a 30, what is this, a 32, was back in here where we had this good move, where we had this good move. So we understand, all right, well, the stock now has several things checked off. It has an upward trend. It has heavy support because of the moving average lines and the trend lines. It's also undervalued on the RSI. So the next thing here that I always do is understand the earnings. I want to make sure that the stock that I'm investing into, I know the earnings, and that's coming out 11/13/2024. Holding through an earnings is incredibly risky, and looking at a stock that we actually did this yesterday with is DX. DX here, we held and we set our stop below this, and at one point we were up handsomely on this trade, but then it got obliterated, right? So we got some good sell-off in it. We still made about $1,200 off this trade. And you guys will notice the same thing. Sold off down to the 90-day moving average line. Good upward trend. Has that great trend line, right? So you're starting to understand, okay, this strategy works. So let's go back to this position and see why we're kind of why we sold it and why we entered it. So I always want to go to some sort of lower time frame. So you guys will notice that this formed this really hard downward trend. So we have a long-term upward trend with the daily, but we have a short-term downward trend on the hourly. So what we did is we actually got in on the breakout of this, right? We got in on the breakout of this trend line, setting our stop loss just below the $4 mark. So the thing about trading is whole dollars, so like $4 even or $4.50 is going to act as a harder support, harder resistance. So entry price near and around that 410 range. Setting our target. Our target price isn't the price that we're going to sell it at, because we want to have realistic targets. So we go to the nearby resistance, and that's up here at about 460. The next thing here is our stop loss. So like I said, the stop was just below that $4 range. So, near and around the 396, where we have a little wiggle room. So now the risk and reward is 3.63, and that's actually good. So what this means is I am risking $1 to make over $3 a share. And this is why I want to show you guys why having a good risk management is important. So if you guys started out with $500, imagine you guys took about 25 trades over the course of a year, risking 2%, because that's about what that is. The risk and reward is a 3-to-1 with your win-loss percentage at 50%, right? When you buy a stock, in simple terms, you do have about a 50-50 chance of making money. So now our total account balance would be about $800. And this is off of $500 with 25 trades. So having good risk management is very important. And obviously, the higher up you go, so like when we occasionally get that 4-to-1, look at that. Now over $1,000 after 25 trades, and even higher, So the thing about trading is it's not about these massive moves, right? So yes, with this stock here, we did make, $600-700, which is awesome. But the thing about trading is it's not these massive returns of 1, 2, 3%, it's not the 100-200% range, excuse me. It's the 1, 2, 3% returns. And the reason why we sold out on this stock here is you guys will notice it just dipped down below these moving average lines. We easily could get buying pressure, and we always could enter the position. But as of right now, we have a confirmation of a trend reversal. So we're just going to continue to, monitor the stock, look out for opportunity, and our stop loss got filled. So that's completely fine, right? Trading isn't about home runs. And I think a lot of traders that are just starting out expect these crazy returns of 100-200%, doubling their account after 30 days. When in reality, if you're starting out with $100, it's better to just go base hits, right? 1, 2, 3%, and just have that compound. I show you guys that example with $500, and you guys can obviously simplify it. But guys, I hope you guys all enjoyed this. If you did, hit that like button, subscribe, and I hope you guys have a great rest of your day. Check out our school, code LEARN, 50% off, and we'll see you guys in there, and take care.